Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Vamakshi Doria and with me is Vivek Iyer. Well, Vivek, good afternoon to you, but not such a good afternoon for the markets. The markets have taken a knock in today's trading session and so have the broader markets.
That's right. Good afternoon, Vamakshi. So what you have essentially seen is that the last hour of the trading session, you've seen quite a lot of the large caps, the heavyweights as far as the Nifty Bank 50 are concerned. All of them are seeing quite a bit of selling pressure emerge, and which is why markets now near the day's lowest points. The mid-cap side of the market under significant pressure, down almost 0.6%. Let's start off the top headlines. We have quite a lot lined up on today's show. Stocks under pressure as fresh global uncertainties and mixed earnings cloud the outlook. Metals and IT gain while auto and financials drag. Mid-cap index falls in line.
Defense and railway stocks take a breather. Defense index corrects over 1% amid profit booking, while railway stocks like RITE, Titagarh as well as Ircon are under pressure.
Q4 results boost Pfizer stock. Revenue surges 8% while margin expands on a year-on-year basis. Stock up over 11% today.
Kescorp slips more than 10% as it sees an exceptional loss of 157 crore rupees in the fourth quarter due to demerger costs. The management tells CNBC-TV18 that they expect to deliver double-digit growth in FY26.
HEG under pressure after reporting a weak set of Q4 numbers. The company reported a 73 crore loss versus a profit in the same quarter of last year. The management tells CNBC-TV18 that they expect realizations to start inching upwards during the course of the calendar year.
Well, 24,780, that's where the Nifty is at. It's a downtick of almost 161 basis points. The Sensex 2 trading in the red with a cut of almost 600 points. The Midcap index also not holding up quite well in today's trading session. In fact, it is trading close to the day's lowest point as of now, down almost 0.7%. As far as some sectoral indices are concerned, most of them are in the red with the key drags being from the auto impact. Nifty Financial Services is also not holding up quite well, but the metal index, that continues to do well in an otherwise weak market. But, in our segment, mid-cap movers, let's focusing on the mid-cap space. We have Hormas to take us through that the mid-caps that are actually moving around in trade. Good afternoon to you, Hormas. Not such a good afternoon for the mid-caps.
Oh, good afternoon, Vamakshi. And it's indeed not a good afternoon for the broader markets. But of course, after 6 to 7 days of outperformance that they have had over the benchmark indices, it is only apt that there is some profits being taken off the table. We start off with some of the top losers then in the broader markets and take a look at Bajaj Holdings, Alembic Pharma. Eternal is now at the lowest point of the day. Apar Industries too not having a very good day at the office in today's trading session. Losses of anywhere between 4 to 6%. Some earnings reactions as well, predominantly to the downside in today's session. But Pfizer is an outlier though, 12% higher on the stock. Strong results, dividend announcements, and the top gainer on the Nifty 500 in today's session, HEG and DOMS Industries too, not seeing a pleasant reaction to their results. Some of the others in defense seeing a profit booking as well, as we saw yesterday. HAL after the downgrade that has come in from UBS. Data patterns, of course, Nuvama is expecting the stock to rally 60%, but the stock after its rally is taking a pause. And Cochin Shipyard, the outperformer of last week, is the underperformer in today's trading session. Defense is followed by railways, of course, and all of these railway names that were surging over the last few trading sessions are down anywhere between 4 to 5%. And lastly, some stocks that are moving on the back of strong volumes, and you can even say that they are bucking the trend in an otherwise weak market. BASF, look at Zensar. It is Midcap IT that is bucking the trend. Newgen Software is up 10% and Zensar too trading with gains of 6.5% on very strong volumes. Back to you guys.
Thank you so much, Hormas, for joining us, giving us a sense of the markets. And like you mentioned, defense, railways, some of the teams that did very well in the last couple of weeks, today taking a bit of a knock. But it's a good time to welcome Ajit Mishra from Religare Broking for a technical check on the market. Thank you so much, Ajit, for joining us. Well, as we speak, market nears the day's lowest point. Do you expect to see further distribution and downside, or do you feel Nifty can take support and rally upside from these levels?
Yeah, good afternoon, Vivek. Vivek, in the last few trading sessions, we were seeing that markets were witnessing more of a time-wise correction. There was hardly any major price move on the downside. Today, we are seeing that yes, we are drifting below 24,800 mark. The previous swing highs, which we have recently recaptured. But at the same time, we were hoping that banking should provide the impetus for the next leg of the up move, and that is also witnessing a bit of a proper taking. So in case if we fail to hold this 24,800 mark, probably we can see further, decline or extension of this profit taking towards 24,500, 400 zone, the next major support area, which coincides with the short-term moving averages. So as of now, 24,800 is a critical area. If we manage to hold the same, probably we can see some rebound or respite in the coming sessions.
Well, thank you so much for that, Ajit. This is Vamakshi joining in. So far, over the last couple of sessions, every dip has been bought. Is this likely this time around as well? And, what would be your top stock picks if this does happen?
Yeah, good afternoon, Vamakshi. So, we were seeing that, especially in certain themes like defense, railways, we were seeing noticeable traction. And as you were discussing about mid-cap and small cap also, last week it was in the range of around 7 to 9%. We saw that most of the mid-cap and, small cap names also participated in the move. Now, after this strong performance, there could be a bit of a consolidation of profit taking in that segment. And in the broader markets, I'm hoping that certain pockets like from the realty basket, energy basket, metals, they might continue to do well. So, basis that, the first recommendation that we have for the day is Coal India. The stock was hovering in a very tight range for almost 1.5 months, and we have seen a fresh breakout, consolidation range breakout. Plus, it has reclaimed the major averages also. So, 426 is what we are eyeing in the near future. So, with stop at 405, one can accumulate Coal India at current levels. Another stock that from the energy basket that we like is GAIL. Here also we have seen decent consolidation after a corrective phase, and the risk to reward is favorable, means we have major supports lined up very close to the current prices. So 200 is something that we are eyeing in GAIL in the near future with stop at 188.
Thank you so much, Ajit, for joining us, giving us your sense on the markets, also giving us your short-term picks as well. Well, it's now time for a short break. No relief on AGR dues as SC rejected telcos. Please, we discuss the road ahead for Vodafone Idea with Balaji Subramaniam from IIFL Securities when we return.
Good afternoon. You're watching Midcap Radar on CNBC-TV18. Of course, just a short while ago, we did see Hormaz outline all of the earnings reaction. But, just to add to that, let's pull up the chart for HLE Glasgow. That stock is seeing a very strong uptick in today's trading session after the company reported its Q4 numbers. Last I checked, the stock was up over 15%. As of now, the stock is locked in upper circuit. Apart from that, Ecos India Mobility as well was one such counter that reported its numbers post-market hours yesterday. Continues to do well in trade today. Hindustan Foods is another counter. Apart from that, on the way down, it was Guess Corp that saw a very sharp knock. Marksans Pharma as well saw a downtick in today's trading session. But moving on then, Vodafone Idea was in focus in yesterday's trading session. It saw a very sharp knock, and the Supreme Court has rejected its Vodafone Idea as well as Bharti Airtel's plea seeking waiver of interest and penalty on adjusted gross revenue dues. Calls the petition misconceived. The decision comes as a setback for Vodafone Idea. The company had cautioned the government that it won't survive beyond FY26 without relief. So what is the road ahead for Vodafone Idea now? We now have Balaji Subramaniam, who is the Vice President at IIFL Securities, joining us now to discuss more on this. Good afternoon to you, Balaji. Well, we did see the rejection coming in from the Supreme Court, but one line that actually stood out in the dismissal: if the government wants to help you, we are not coming in the way. So given that government holds nearly 49% stake in Vodafone Idea, what are the options that it does have available to help the company?
Thanks for having me on the show. If you look at one of the observations made by the Supreme Court yesterday, it was that don't bother us in case you want to provide a relief to the industry. We will not come in the way. So I would think that that was just an observation, and we have to see how this pans out going forward. Maybe the government can, or the DOT more specifically, can file a fresh petition seeking clarification on the said matter, whether if the government were to move ahead with any changes to the original AGR verdict of September 2020, whether that would constitute a contempt of. So the Supreme Court puts it in writing that it would not be a contempt of court. Then I think the government has flexibility to take a call on the AGR matter. Now, the different options could be one, to kind of waive off the interest penalty and interest on penalty on the AGR dues, either or entirely. The second could be to extend the payment timeline of the AGR dues, which has been, now set by the Supreme Court as 31st March 2031. Or there could be some, correction of some of the calculation errors which the industry has said were part of the DOT affidavit. And even in the past, the DOT has said that there are certain errors that they would like to correct, which was shot down by the Supreme Court way back in 2020. So I think these are some of the options in front of the government, which will mean that we could see some sort of a relief either in NPV terms or at least in terms of timing for Vodafone Idea.
Balaji, given the fact that the government is now a significant shareholder when it comes to Voda Idea, given the fact that there are so many dues that are that Voda Idea actually owes to the government, and also given the fact that it is in the best interest of the government to ensure that Vodafone Idea continues as a running concern, are you a little surprised that there has not been a lot more support forthcoming as of now? Number two, in case Vodafone Idea does manage to get some of the relief, that you've mentioned via quite a few of the options that you enumerated for us, 3 options, do you think that the same relief will also have to be given for Bharti Airtel? In that case, does it become a negative proposition for the government?
So I think the government has done its fair share of support for Vodafone Idea, because if you look at the past history, the relief package coming through was necessitated by Vodafone's financial position back in 2021. Then they allowed Vodafone Idea to convert the interest during the moratorium into equity. Subsequently, this time also they allowed the payments for the next 12 to 18 months to be converted into equity, and as a result, the government's stake in the company has gone up to 49%. Now, I think one of the reasons why the government was reluctant in terms of giving a relief on the AGR dues was that the government was kind of certain quarters in the government were worried that any outright relief measure could be construed as a contempt of court. So that is probably one of the reasons why the government refrained from giving any outright relief on the AGR matter to Vodafone Idea. Now, as I said a little while earlier, if the Supreme Court were to allow the government to explore more options, then that possibility also is in the offing. Now, as far as providing relief to Bharti Airtel is concerned, yeah, Bharti Airtel is in a strong financial position. They are making pretty good cash flows. But at the end of the day, you cannot give any targeted benefit to one of the players while the other player, which has also got some of these liabilities, they cannot be turned away from. So my sense is that it will result in some sort of relief potentially coming to Bharti Airtel as well. So that is inevitable. I think if the government wants to ensure a 3 private player market, then that is probably one of the puts and takes that the government will have to live with.
Sure, and let me play the devil's advocate here. Then, if you let market forces play out as it is, do you think Vodafone Idea can continue as a going concern without significant government as well as investor intervention? And do you think that this decision, if there is no action that is taken, could accelerate insolvency or push the company towards bankruptcy proceedings?
See, if you look at Vodafone Idea's cash flow position, if there is no relief, then they will have to cough up nearly 16,500 crores in AGR dues before 31st March of 2026. Now, if none of these three options that I just spoke about were to materialize, the other option could be the government maybe bringing out a special ordinance or a bill in the parliament which lets them circumvent the Supreme Court ruling. So that is a possibility. Maybe that is not something which the government would want to ideally explore as the very first measure. But if none of the above options work out, then this is also a possibility. And if push comes to shove, I wouldn't be surprised if the government ends up taking more stake in Vodafone Idea. I do understand that the government has said that they would ideally not like to convert any more dues into equity, but that is a very distant possibility if none of these work out. So I think there are many of these options before we start thinking about Vodafone Idea moving the NCLT and all.
Right. Balaji, one last question. I request you to keep your answer a bit short. What are the implications as far as Vodafone's vendors are concerned? What kind of a knock will Industar take given the fact that receivables once again will come into question?
So as of now, they are all currently, there are no overdue receivables. So I think this is an evolving space. So even now, Vodafone Idea has got cash on its books. So I think that is something which one will have to probably keep an eye on, maybe 6 to 9 months down the line. As of now, I don't see any issues there.
Sure. Thank you so much for that, Balaji. Thank you so much for joining in and giving your perspective on this issue. But let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. Don't go anywhere. Stay tuned.
Your families have been in the gems and jewelry business for centuries. In your case, centuries. In your case, how long?
Decades.
Decades, okay. And you didn't want to do anything with the jewelry business, but yet in 2005, both of you decided that it sparked the fire within. What happened there?
Aditi's always loved jewelry. I grew up watching my dad in wholesale gemstones, and I always thought it was a sleepy, antiquated business, so never really wanted to get in. Life, of course, comes full circle. So my first brush with jewelry was in college. Kind of crazy story. Ratan Tata came to speak to campus for us, and I introduced myself and I said, I'm such a big fan, but I just want to let you know that when I go from Delhi to Jaipur, I'm behind a Tata truck, and the exhaust is coming straight into our car, and I fall sick. And so if you can fix that, that would be great. And we had a couple of minutes of conversation. He said, give me your details. And so when he got back to India, he then wrote me a letter saying, next time you come to Bombay, I would love to meet you there, which is insane. So go to Bombay, and we had a 3-hour conversation, and he's like, why don't you visit Tanishq? Tell me what you think. And that was my first brush with jewelry retail.
Welcome back to Midcap Radar. Well, the focus is on QSR, and Mangalam today is focusing on two companies within this particular space, both Restaurant Brands Asia and Westlife Football. Mangalam, what are the insights you're gathering?
It's the battle of the burgers, as they say. Yesterday we had the numbers that came in from Restaurant Brands Asia. Last week we had Westlife Foodworld report their numbers as well. So I thought it makes sense to, do a comparative analysis of how both these burger companies actually reported this time around. If you look at restaurant brands, just the India business, they did revenues of around 490 crores, whereas Westlife Food, which operates McDonald's in south and western part of the country, did about 603 crores. But if you look at the bottom line as well, EBITDA for both these companies were pretty similar in the fourth quarter, with 15% margins coming in for Burger King. And also the restaurant brands, Burger King India, same-store sales growth was 5.1%, which is actually nearly 5 times that of McDonald's. And they have 513 stores as against McDonald's 438 in the southern and the western parts of the country. And if you look at it on a consolidated basis for the full year, restaurant brands has actually crossed Westlife Foodworld's revenue at 2550 crores. They have margins of 10.7%, but that's largely because of their Indonesia business, which is a margin drag, and they are looking at margin improvement. Let's look at what both the companies are focusing on in the near future. McDonald's has put out their Vision 2027 with 4,000 to 4,500 crores of sales with 18 to 20% margin, high single-digit same-store sales growth, and they are targeting 40 to 45 stores per year, looking at nearly 580 to 630 stores by 2027. On its part, Burger King says that they will open 80 to 90 stores every year for the next few years, by FY29 reaching 800 stores, and at the same time, they expect near 400 basis points gross margin accumulation over the next few years. What does this mean for the overall business and the valuations? That's the big question, right? For similar sales and better margins, Burger King actually is trading at half the market cap of Westlife. And basis analysts' expectations, FY27 EV to EBITDA, Westlife is actually at a near 33-34% premium to restaurant brands. So that's something we'll watch out for in terms of the way forward for stock returns for both these companies. What is the biggest risk out here? The risk is growth, whether it comes in from competition, whether it comes in from, lack of store addition, whether it comes in from lack of increased same-store sales growth in the same stores is something that we'll watch out for. Slower than expected growth pickup would topple the apple cart of this quick service restaurant brigade. But as of now, in terms of valuation, Burger King seems a lot more attractive than Westlife.
Thank you so much, Mangalam, for joining us, giving us a sense of what exactly is transpiring as far as the Battle of the Burgers is concerned. Well, if you could just pull up the intraday chart of Zydus Life Sciences. Remember, the company just delivered its Q4 numbers. While there was a significant increase as far as the US sales was concerned, analysts are pointing out that this could be mainly due to a lot of one-off factors and one-off drugs that could have helped the cause as far as Q4 is concerned, stock near the day's lowest point. But Vamakshi, after a long time, I'm actually seeing Siemens actually hold an analyst call. You are in the call. What are the key takeaways? What did the management indicate?
Well, absolutely, Vivek. Siemens reported its numbers a few days ago. The Siemens Limited business did not do so well. The energy business did quite well. And today there was a con call that was scheduled in the morning. And in that con call, they said that, they're quite positive on the Indian economy, and they're seeing an uptick in manufacturing PMI. As far as new orders are concerned, they have highlighted that growth is seen across all segments except the low voltage motors. There is no slowdown in emerging verticals such as electronics, semiconductors, batteries, data centers, but private capex has not yet picked up in the conventional verticals. Flattish capex growth is seen across automotive, machines, buildings, metals, as well as food and beverages. Now let's look at what they've said for particular segments. As far as the digital industries is concerned, they're seeing some demand normalization out here given the slowdown in private sector related capex. As far as mobility is concerned, they say that project related delivery is scheduled to pick up in the second half of FY26. A robust pipeline is seen in the rolling stock. Signaling is also picking up for them. So positive commentary out here. And they have also highlighted that metro expansion in tier 1, 2 as well as 3 cities is a big opportunity for them. But the financing for metro projects is definitely a bit of a concern. The 9,000 horsepower project is on track. The prototype should be available over the next couple of months, and manufacturing schedule is also in place. In addition to that, they've received an additional order related to the maintenance work. As far as the low voltage motor is concerned, they've highlighted that order growth was impacted due to weak demand as well as pricing pressure. But for exports, they have a very good outlook. Intention is to grow exports primarily in smart infra as well as the mobility business. For smart infra business, it is closely linked to the global electrification environment. So therefore, slight slowdown on the global level has impacted the business for sure. But mobility, once the localization level improves and stabilizes here, the parent could actually end up procuring more from here on. So therefore, Siemens, right after the con call, saw a sharp spike in trade today, but it has definitely cooled down from the day's highest point.
So cooled off after the bit of the spike that it's seen in line with the market trends. Well, a couple of sectors on the radar. Have a look at the Nifty Pharma Index. That's seen quite a bit of a dip. Names like Sun Pharma, Lupin, Zydus Life, Syngene, all of these stocks are significantly lower in the session today. There you see the Nifty Pharma Index down almost 0.7%. The defense pack, a couple of stocks are holding up. Have a look at Bharat Electronics over there. That particular stock after the conference call a little earlier today is doing quite well. And BHEL too is managing to hold on in the green. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.